Back in February, Zillow stock was trading at an all-time high of $212 per share. On Tuesday, it finished the day close to a 52-week low at $87.59 a share. Zillow has been on a steady 8-month decline despite a red-hot housing market. So, does Zillow's decline say something about the residential real estate market? In my opinion, no, as I believe Zillow's fall seems to be tied to a number of other issues. The 10% tumble on Monday came after the company announced it was pausing its home buying business, at least for the remainder of 2021. Although Zillow bought and sold thousands of homes in 2021, I think the ongoing labor shortage is a big reason why Zillow hit the pause button. The company still will have a steady flow of new homes coming in for months while it honors any existing contracts. The concern was that Zillow paused because it had too many homes in its inventory and there was a slowdown in demand. However, this isn't the first time Zillow temporarily halted its home buying operations. And as for the housing market itself, Zillow has said it's not expecting a correction to hit until the next year. Over the next 12 months, the company is forecasting an 11.7% appreciation in home values. In Zillow's own words, the housing market is transitioning from a white-hot to just a red-hot market. But let's see what the charts show. And we're looking at the monthly chart on Zillow Group Inc. Class C capital stock, and the symbol is Z, and the price on Tuesday was $87.59. Now we go back here to mid-2014, we see a previous top at that point. Subsequently, we had a pretty good sell-off into 2016, but a very long-term nice bottoming and basing, and then another move higher up to above $200 a share. Now, several months ago, we took a look at the chart on Zillow, and I indicated that it was time to be cautious because there was going to be sideways trading at best, but the probability was a downturn, and that's what we got. Right now, the price has come through that 20 EMA, this blue line here, and we're resting well above still the 50 EMA, but the 50 EMA may be a target that the price chart is going to be looking for. So we'll have to watch that in the subsequent months coming up here. The volume looks fine, except you don't want to see increasing volume in a downtrend. But for the most part, beginning here in early 2018, we had a decent uptrend. Now, into the MAC, and this is what we looked at several months ago, was the turn in that fast line up here, which was indicating it was slowing down. The move was slowing down, and so that means perhaps some sideways trading at best, maybe a decline. And a decline is what we got with the fast line coming on through here, through that slow line, which is the red line. So the fast line moving on down. And it seems to continue to accelerate here with this separation between the fast line and the slow line. We still have strength above that zero line, so perhaps there's some hope. But buying stock based on hope is not a good thing to do. So let's just continue to watch this as it evolves. The histogram is showing a pretty steep decline with no sign of stopping. Pretty much the same thing there in the price rate of change, though we are above that zero line here. And it doesn't seem to be that steep of a decline, even though the price has declined quite steeply. Into the RSI, we're at a very moderately weak 41.25, so we're below that midline or 50 line. You don't want to be down there, but we're just going to have to wait and see if this turns into any kind of attempt at a bottoming and a basing. You see this little fish hook here, but only time will tell on that. It's going to be a few months before I would stick my toe into that water. Moving on down here into stochastics, also showing the weakness moving on through that 50 or midline. Down below that, we're not quite into that oversold territory, but I would imagine it's going to take another month or two before we get there. We are there in the Williams, well down here at negative 97.59, so this stock is very, very weak. Now back here in 2015, 2016, that took over a year to bottom and base before it started heading on up. So I think you have some time. I don't know if it's going to be that bad, but I still say you have plenty of time. Back up here to the price chart, one last look. We'll see what happens here. If it comes on down any further, I think it's going to stay above that $70 or $75 per share. But again, only time will tell. But I would just stay on the sidelines and watch, and always conduct your analysis using the fundamentals. And for today, that's ChewDog Charts. Thank you.